It's our last edition of Frontier Opening Bell on Frontier Africa Reports this morning. Thank you for joining us on the show. I'm Temple Ashaju. With us on the show this morning, we start from the eastern part of Africa, where we have Ali Kansachu of Rich Frontiers Management joining us from that region. Thank you for coming on the show this morning. Bosun Omofai, Executive Editor at Frontier Africa Reports. I appreciate your presence. And of course, Omotayo Idowu, who is an oil and gas sector analyst with Greenwich Merchant Bank. Thank you for coming through on the program. Luke Ofojobe, our regular on the show from Frontier Capital Management. I appreciate your presence. Now let's kick in with the Frontier African indexes that we track. Nigeria was down 0.63% on Thursday. BRVM Stock Exchange slipped by 0.04%. Egyptian Stock Exchange closed negative to 0.29% on Thursday, and Kenya was down 0.44%. Johannesburg Stock Exchange was also down 0.80%. Let's see how those indexes turn around this week or today, Friday, because they actually all opened in green at the beginning of the week. This week actually, so today being the last trading day, we'll see if they don't close in the negative direction or in south as they did yesterday. Now looking at the Eastern African headlines, we start with Kenya, where the central bank there has transferred some 5 billion shillings to the Treasury, the exchequer, as dividend for 2020. British American Tobacco, Kenya releases smoking results, profit was up by 42%. Stanbic Africa raises stake in Kenyan units to 71.2%. Tea markets prices drag Limuru Tea net profit for the year 2020, and Ethiopia, the communication authority in that country says there hasn't been any proposal received for the 2 new telecom license that is expected to be bidded for. And let's have a go with all those headlines in the Eastern African region, Ali, and how do you intend to trade them today?
So thank you and good morning, everyone. Let me start with your top headline, which is about this transfer of 5 billion shillings to the Treasury. It caught a lot of people off guard. The central bank has already transferred a dividend. This was a subsequent payment to the government, and most commentators thought that it spoke to a cash crunch at the government level, and this was the central bank assisting the government through what people thought was a cash crunch. Of course, this week we've had the announcement that the IMF is putting forward a program over 38 months of support. We've had talk out of the Treasury of about a $1.4 billion Eurobond, and we are in discussions with the World Bank. So I think, overall, Kenya has parlayed its geo-economic position in this region at a time of immense volatility in the Horn of Africa. And I think the IMF, the World Bank, and the likes are all seeking to support Kenya through this period. What it does mean is that the can is being kicked down the road and probably around 2024. But the central bank decision caught everybody off guard a little bit. BAT reported some, as you've described them, some smoking results in a very tough environment. Profit was up 42%. Gross revenue was down 2%. Net revenue up 5%. Profit before tax up at 7.41 billion. Earnings per share up 42%, and they lifted the full year dividend payout by 34.32%. And as you know, all over the world, that's a sort of outlier position that you'll find. It was interesting what they said when you dug into the detail of the results. Kenya saw a 24% decline in domestic sales, so that's pretty big. But where they did very well was in export volumes, plus they got the concession, VAT concession and corporate tax concession that Kenya introduced for a limited period in order to assist companies through the COVID cycle. But make no mistake, these were very good results. Price earnings ratio of 7.9. We could see the share price rally at least 10 to 15%, and that dividend is very juicy, just over 10% in an environment where the central bank rate is 7%. So people will go for that. Stanbic raising their stake in their Kenyan unit. They've been talking about this for a while. This is in line with what they seem to be doing across the continent. I saw they're doing the same in Angola. The Kenyan business, very solid business, very well managed by the Zimbabwean CEO, and share price is around 84. It'll be interesting to see how they navigated last year once they released the full year results. Tea prices, look, you know, the strange thing is there was a sharp fall in tea production in India, but it didn't really help tea prices in Kenya. So Limuru Tea putting out a profits warning. And then finally, your story about Ethiopia, no proposal received. This was in response to Safaricom the previous day, who said, look, you know, we've been shortlisted the sixth, and Ethiopia slapped them down with this subsequent announcement saying no proposal received for the 2 new telecom licenses. But you know, what it clearly says to me is that Safaricom is keen to go into this market. They're working in collaboration with Vodacom, Vodafone, and with OPIC, OPIC, the US arm. But the US arm has put some conditions precedent on their loan. One of that is that they're not to work with UA.
Right.
But overall, it tells us it's a big market, and the Safaricom understand volatility, so they're keen to get their hands on that market.
The interesting thing is that the Communication Authority has not refuted the claims that there will be some liberalization of the telecoms market, which is interesting to the private sector. Also, are you interested in any of these headlines in the eastern part of Africa? I mean, I know that you are a lover of tea. You want to have a go with the tea market's prices?
Yeah, it's okay. I understand how I do understand how it goes in. I say cheers to everyone, whether it's Limuru Tea you're drinking this morning, Ali, or Temple, whatever you folks are drinking. In Nigeria, I think it's more of the what are you drinking this morning? Is it GDP you're drinking? I'm sure Luke Ofojebe will spoke about the whether you can eat GDP for breakfast. I don't know, but I think that the big story for us will be what we are going to talk about next.
Great, great. And that takes us down to the Western African space, where we look at headlines coming in. It says from Ekiti State, which is in the western part of Nigeria, the first batch of pregnant cows from New Jersey, USA have now arrived. Eco Dairy Farm between Promasido and Ekiti State government targets 10,000 liters of milk per day. And the biggest story out of Nigeria is the GDP data was released by the National Bureau of Statistics yesterday, is that the economy recovered in Q4 by 0.11% and falls negative of 1.9% full year 2020. Senegal's ex-minister of finance, Mahktar Diop, named first African MD of IFC, and Togolese IFAD president Gilbert Humbo gets a second time in office. Now let's come to you first. I'll come to you, Omotayo, with these GDP data. I mean, how are you digesting it? Did it fall in line with your expectations or not?
Okay, so the GDP results surpassed analyst expectations, majority of analyst expectations, as a lot of analysts had projected that the economy wasn't going to come out of recession until 2021, Q2, late Q1, Q2 2021. We see that the uptick in the rebound was caused by sectors like the agricultural sector, the growth in telecommunications, health sectors, and mining and quarry as well. And so we attribute this, to the policies of the government currently, particularly the fiscal policy measures of the government when it comes to the intervention funds that we see in the agricultural sector. There's been a lot of that, the Boras program and the rest of it. Also with the initiative of the COVID as well, we see that that has also spurred when it comes to the health sector as well. For the sectors that came out red, sectors like the oil, the manufacturing, and the rest of it, just speaks to the fact that policies have to be made, steps have to be made in order to harness the growth opportunities in those sectors.
Right, and thank you so much, Omotayo. Look, how are you digesting this? Do you agree with the data? Because I don't think you agreed with the fact that, or you expected it this way, actually.
Good morning, everyone. I mean, similar to what Omotayo just said, I mean, the results, the GDP data came in better than consensus expectation. I mean, the expectation was that we are going to see another contraction in Q4 2020, but slightly smaller than the one we saw for Q3 2020. Well, and what really drove the growth in Q4 was the significant jump we saw in the telecommunications sector, as well as the agri sector. The oil and gas and the manufacturing sectors contracted further. I mean, we even saw a steeper contraction in the oil and gas sector. It contracted by almost 20% in Q4 year on year, worse than the 13% contraction we saw in the third quarter. So going forward, I think this is a positive for the Nigerian economy in a way, because clearly it means that we've been able to shake off the impact of the pandemic on the Nigerian economy. So going forward, we should expect to see further growth in Q1 and in Q2 especially, because it was in Q2 last year that we felt the impact of the pandemic the most. So in Q2 this year, we are going to see significant growth. And that will be a plus for the Nigerian economy, of course. But there are still some policies that the government still needs to address. So the government shouldn't be carried away by the fact that we've exited recession. No, there are some other issues that should be addressed immediately. Issues like rising inflation levels. I mean, looking at the recently released inflation figures, headline inflation rose to almost 17%, food inflation at 21%. So clearly, these are issues that the government needs to address. When I say the government, I think I should be specific. These are issues that the CBN needs to address, because this is clearly under the purview of the CBN. So the CBN needs to revert back to its mandate of price stability to ensure that this inflation doesn't get out of hand. Secondly, in terms of driving investments into the sector, I mean, look at unemployment rates. It's getting close to 30% already. So what should we do to ensure there is improvements along that line? I mean, we should drive investments into the country, come up with policies that will attract foreign investment. And how do we do this? We need to address structural issues like, multiple foreign exchange rates in the country, because for a foreign direct investors, when you look at the exchange rates regime we have here in this country,
It looks like we're losing.
just leave it confused. Parallel market about 470. You have the official rate at 38, NAFEX rate at 400. Banks are charging about 420. I mean, as a foreign direct investor, you're just confused basically. So the CBN needs to come up with something close to a single exchange rate, and try to keep it to some extent freely floated, not completely floated anyway. So that can actually attract foreign direct investments into the country. When we begin to see this, we'll see improvements along employment rates, and that will help to boost consumer spend in the country and definitely translate to further economic growth going forward.
Okay, Luke. Yeah. Thank you very much for that deep analysis and, of course, the forward guidance you just gave there. Paulson, would you like to contribute to these headlines and, of course, probably explain to us the significance of the dairy farming in the state and how it supports the IGR of that state?
No, thank you, Temple. The dairy farm story is there, is something good. We'll see how private sector will continue to work with relevant states government, which is very good, taking it down to the subnational levels. That's where you find development. That's where you find job creation, by the way, not really at the federal level. So if all the 36 states of Nigeria and the federal capital begin to take initiatives of this nature, working with the central bank, working with the Afreximbank, working with the AFDB, working with ECOWAS Bank for Development, EBRD, and all of that, I'm sure there will be a whole lot of development at the local level. We don't have an idea how many jobs this will create, but I can tell you how much this will have a knock-on effect on the Ekiti state as a whole and in the immediate community where this dairy farm is being put in place. So this is part of what we call development. Then we need to work on the roads and all of that to that kind of farm, for example, and make it safe and things like that. And perhaps the entire herdsmen and farmers conversation, we can begin to take a cue from this, because these cows will not be roaming around, by the way. So they will have to be supplied food on location and what of that, where they are ranched and all of that. So that is one thing on agro-industrialization. My quick point on on some of the comments around the GDP is that, look, we have very serious structural rigidities in this country. And when everybody talks about the central bank, I think we are talking to one side of the engine. There is no, unless you're talking about a very toy, small, one engine aircraft. See, to fly across the transatlantic ocean, you need the twin engine airliner. And that is what Nigerian economy is, the largest in Africa. So if you talk about the central bank, that is one engine. The fiscal authority is the second engine. We know food inflation is 20%. And you can share that down the middle and say, look, what about the spate of insecurity? People are leaving the farms. Look at the bandits killing about 2 dozens of farmers on their farmlands on rice farmland. That is not central bank fault, by the way, because everybody else is going to leave the farms. So we saw the kidnapping of the school children we're talking about a few days ago. That's not central bank fault. No foreign direct investors will come into such an environment. That's the truth. So it's not about if central bank float the naira, then foreign direct investment will come. See, we didn't have free float currency in the years when we were having 6-7% GDP growth in this country, and foreign direct investment were in double digit of billions of dollars. There were multiple exchange rates. So I think we should just get this conversation right about whether once we match the same exchange rate, then all the money in this world will come in. In North Africa, for example, for Egypt, yes, the exchange rate worked. But again, look at the whole work that the Egyptian authorities are doing on road, rail. They are building everything fast and furious. There are no militants hanging around, kidnapping school children, and all what have you. If you don't fix these structural problems and the government take fiscal measures, we will not have this, no matter how many single exchange rates you have. In fact, foreign direct investors, first of all, want what you call a business environment. That is the truth. If, for example, Unilever from the UK brings additional $300 million into Nigeria, but they are scared about the crisis of kidnapping and all of that in Nigeria, why would they bring the money here? They'll go to Egypt, they'll go to Kenya, they'll go to Togo or Benin Republic or Ivory Coast, where you don't have such problems. So this insecurity, and we all forget that the former finance minister, Ngozi Okonjo-Iweala, who is now Director General of WTO, said while she was in office as the minister in charge of the economy, that this insecurity back then, 6, 7, 8 years ago, will hurt Nigeria's GDP very badly. She said it. Now we've walked all the way down to this part, but everybody's blaming the central bank for single exchange rate. I want the central bank to give me the single exchange rate, and let's see whether investors will come into this country if we don't have security, if we don't have adequate protection on ground, or if we don't have the structural issues fixed. That is part of, and I think the World Bank, IMF had said that in their reports. My apologies, please.
All right. I know that on the mind of a Motayo, it will be that one of the key infrastructure that Nigeria needs at this point is to have a refinery, at least to mitigate the effect of the landing cost as to the consumption of petrol on the streets. And let's move. Ali, do you have any contributions or comments to make on Nigeria's GDP before we touch on South African headlines?
I think, it was a pleasant surprise. I think that was the first thing. My takeaway is about that. I do agree with what Barson is saying, which is regarding the insecurity, which I think is becoming increasingly problematical. And I think, we can't underestimate the fact that for the last 5 to 6 years, the two biggest economies in sub-Saharan Africa, Nigeria and South Africa, and others, have been having a declining per capita income when you look at the GDP from a per capita basis. And really, I think we got to get back into that positive feedback loop of improving people's livelihoods. And that is the biggest defense against increased destabilization in so many parts. We've got the same problem in the Horn of Africa. And really, we're not going to go very far unless we deal with that problem. And I think we really have to focus in on it.
All right, then. Thank you so much, Ali, for that comment. Let's move on to the Southern African space. We're running out of time. Zimbabwe raises rates to 40% from 35%. The aim is to actually tame liquidity and FX speculations. AB InBev signs new $10 billion sustainability linked credit facility. And of course, Caledonia Mining expects 2021 gold production between 61 and 67,000 per ounce. Let me start with you first, Ali, on these top headlines here before I get the contributions of Luke and Mahktar, especially as it relates to AB InBev, which is the beer manufacturer in Nigeria, handling international breweries.
Sorry, let me just deal with Zimbabwe because this is monetary policy. I don't know how to describe it. Look, in Zimbabwe, you've got inflation running at around 300%. You have a 500 basis point increase in the interest rate. But really, you've got a situation of which, and I don't know how to solve it, but you're basically running the biggest negative interest rate scenario, I think, globally, other than Venezuela. If you're buying, if you're investing in Zimbabwe now, call me old-fashioned, but I think to make the Zimbabwe economy and the currency stabilize, you're going to have to go dramatically higher in interest rate terms. And until Zimbabwe does that, it's stuck in this dislocation, I'm afraid.
Great. Thank you so much, Ali. Mahktar, anything to say about AB InBev securing this particular facility? We understand that this is one of the biggest facilities when it comes to ESG funds funding in Africa, or in fact the whole world globally. Okay, Taya's connection looks freezing at this point. Luke, let me come to you with your contributions or comments on this headline.
What I would just like to say is that AB InBev, if you look at all the markets where they are currently, I mean, they've been the market leader, if not like the second market leader, basically. So they usually offer like a strong competition in any markets where they find themselves. We've seen it here in Nigeria already. We've seen the aggressive promotions, and currently they are like the biggest competitor against Nigerian breweries when it comes to beer sales in Nigeria. And currently, even Guinness itself is already slowing down on beer sales and focusing more on the spirits brands. So, I mean, we might be seeing the same thing play out in the South African markets, basically, because these guys are usually very aggressive. We are going to be seeing promotions as well in that space, just to drive awareness and also to drive revenue in the short term. And before you know it, they start looking for how to gain customer loyalty. This has always been their strategy in every market where they go to. So I think we might continue to see more business expansions going forward, trying to install more plants in key regions of South Africa in order to drive revenue growth going forward. So I mean that's really the expectation for AB InBev for now.
All right, then. Thank you very much, Luke. Now let's wrap up the show with the last lap, which is the Northern African space, where Afreximbank and the African Association of Automotive Manufacturers sign an MOU for funding promotion of Africa's automakers. Hikma Pharmaceuticals also appoints Egyptian financial group, that's EFG Hermes, to manage GSK acquisition. Let me quickly come to you, Bolson, with this. I mean, the significance of the automobile market at this point in time when we're talking about the entry of electric cars into the markets globally. Africa is currently talking about the automotive markets, and the Afrexim Bank is actually championing the cause.
I think this story is very significant. Thank you very much. It's very significant to the extent that we have Innocent Motors in Nigeria. Nigeria has an automotive policy. We're looking for all helps we can get as part of our diversification program. So I think this is really good news. And I think the automakers in Nigeria should take advantage of this, and across Africa as well.
Right. So, Ali, any comments?
You know, I think what I like about Afreximbank is that they have this very clever strategy at looking at niches. And this is another example of that, looking at niches and looking how you consolidate that niche and then liquefy it. So again, I think this is a very clever strategy by Afreximbank, and I applaud them for it.
Omotayo, are we going to be needing petrol to fuel these cars and across Africa? I mean, tell us about the significance of this story.
Thank you very much, Luke. This is quite this is a very significant development, the collaboration between Afrexim and AAM, because over time, the reason why the automotive industry in Nigeria or in Africa hasn't really grown as much is because of financial issues, you know, and then so this collaboration sort of solves that, and also the technical assistance that will be provided as well by AAM is very, very significant as well. And so looking at how this would impact the oil and gas when it comes to petrol, this would spur growth in the oil and gas sector, particularly with the AFCFTA, you know, in play. So we see that there will be more demand for petroleum products, and as such, there would be need for modular refineries to be able to cater for these needs. Thank you.
Thank you so very much. Omotayo Idowu from Greenwich Merchant Bank. Appreciate your contributions on the show this morning. Luke Ofojobe from Festival Capital Management. Appreciate your contributions as well. Bosun Omofayo, Executive Editor at Frontier Africa Reports. Thank you so much for your perspectives. Ali Kansachu, appreciate your Eastern African markets perspectives on the show on Frontier Opening Bell. This has been the show for them, and of course the last edition for this week. I'm Temple Ashaju signing off, and I'll say I'll see you next time. Bye for now. Thank you.